Hey everybody, good afternoon. This is Doc and Dave with 12-Minute Trading. Today is Monday, the 6th of 2024. I bet nobody remembers what happened on this day 14 years ago. We had the flash crash in 2010. That was the wildest thing I think I might have ever seen over the last 20 years. But anyway, so we're not crashing today. We're actually sort of melting up. This is our welcome to the melt up. So this is the we're trying to figure out like who is going to come out on top between the Bulls and the Bears, and right now the Bulls have the upper hand
They've
when it
taken it
comes to
back.
they've taken it back. What are you seeing out there in the markets, Dave?
We talked about this last week that, if there's certain levels that if we got above right around that 5150 area in the SPX, that may signal a change in character back the other way. And we're seeing a daily energy release. It looks like it's going higher. We're, last 3 days, kind of the beginning stages of it. I think we're still in the 50s for energy that we track. Exhausted's into about 30 range. So it seems like we're releasing higher. We'll see how this week pans out. I mean, it's like how many Fed speakers can you pack in a day this week, right? So we'll see if there's any changes with any of that. Don't know what's happening with with Israel going into Gaza yet. That's 1 minute there's a ceasefire, the next minute there's not. The parties haven't agreed, so who knows how that'll pan things out. But we are rallying through today, and kind of right near the highs of the day as we speak right now. So right now looks like we are headed higher. I would think 5,200 to me on the SPX is a good target to get to at some point in time, maybe even tomorrow. That may be a point of resistance where we get smacked back down for a little bit. And then we'll just have to see. Next week is the big week, CPI, PPI, all of that. So we may run up this week and then sell it all off next week, back on down. Usually with these moves, what do we get? We got about a 6% correction, pretty minimal after that 4-month run that we had. So usually you get that bounce back up. It doesn't quite get to new highs. You roll over, you put in, the really scary move lower, which cements the higher low, and then you're off to the races again. So that could happen, or this just could be it. We could be off to the races into that summer rally. But I think no matter what, we are going to see that summer rally. How about you? I know you're talking a little bit about seeing something like this before, where it turned pretty ugly after the summer rally.
Well, I'm going to bring over the SPX chart, and we're going to go to a weekly chart with the Bollinger Bands on here. And this is one of the favorite ones that you've been bringing up. Like the price got right down to the middle.
How about that?
Which is a 20 period moving average simple on the Bollinger Bands. So we got right down to that point, which is somewhere where we've been before. And then so far, it looks like we're bouncing off of this. So one of the things this reminded me of was if you go way back here, let's see if I can go far enough back to show this here. I do have 20 years. Let's see where we are here. This is '07. Let's go back to I think it's right there. Okay, so here was a very similar rally that we had in 2006. It went on for about 6 months or so. Started in the fall, and we got into the very end of February, and then all of a sudden, boom. And in this case, we actually went down to the lower Bollinger Band on the weekly chart. But notice what happened here. Boom. We went straight back up to new highs again. And this is a big tell right here, is that we were extremely quiet. We start getting noisy, start getting noisier, and then what eventually happens here as we get further into '07, early '08, is the market just fell to pieces and eventually bottomed out here in March of '09. So we're wondering, not that we're bears. I mean, right now we are still bulls as long as the market is moving higher. But what we're wondering is if we're going to see this thing go up to new highs for this summer and then start to really fall to pieces. And when I say fall to pieces, tops are a process. So we're going to see extremely difficult sell-offs followed by impossible rallies. And that is exactly what we saw at the very end of 2000. If you go back that far, if
Hmm.
you go back to the beginning of 2008, that's what we saw. All of the real true bear markets were highlighted by this transition into incredible volatility. So, yeah, we're bullish in the short term, but ultimately we think that, by the time we get into 2025, we're going to be into some deep yogurt here with the market in just terms of how stable it is and
Hmm.
whether or not we're going to have, regardless of who gets elected in November, I think whoever whoever inherits that throne is going to be in for the ride of their life.
Yeah, that's the big challenge, right? So it, I think people notice that like we are we're in a different world than we were like after 2008, right? So we had
Mhm.
a pretty steady grinding market higher, I mean, if you got a 50-point move on the S&P during that time, that would have been a freak out. Like people would have been like, something is crazy, right? Now we're seeing that every day almost up and down and everything else. I think we're in getting into a time of more frequent bull and bear markets. Like we'll get a 2 year bull and then it's a year and a half bear, and it's and it's getting more manic. And I think a lot of that has to do with the financial position of the U.S., a lot of the money printing and that type of stuff, the debt and everything else, and the way that that counteracts around the world. I mean, you're hearing a lot about Japan and everything else and stuff that they have to deal with. Well, it's those things that start to break, when you get a financial system to a breaking point, right? And that's, I think, where we're getting to. And that's why I agree with you that I think we're going to get these massive, just like seemingly unendless runs that we get, followed by these nasty corrections and stuff that happen more frequently instead of these, kind of just steady markets. And you see it on the charts. Yeah, you're pulling it up right now. You can see, like, look at the last few years just compared to the 15 years or so before it, right?
So
You
everything,
have these,
everything really changed around this point here.
yeah,
But what really kicked things off here was, we were in a pretty steady market to the upside. COVID came along, and all of a sudden the printer went burr, right?
$10 trillion,
Right, and all of a sudden we're starting to see these go ever more vertical, followed by ever more dangerous and damaging corrective moves. So the corrective
yeah,
moves are, it used to be
and
like,
more frequent.
right. So what you were saying is back here, back in these markets, if you had a 10-point gap to start out the day, you'd be like, my God, it's a 10-point gap. Geez, and that
What's
was,
going on out there?
right, that was a 1% move because the S&P was 1,000. So you'd have a 10-point gap and we're all running around like, oh my God, it's the end of the world. And now a 10-point gap is like next to nothing. It's just noise.
That's
Eh,
a few minutes. I mean, you look at today, we're up 40 handles, right? After being up, what? We were down, what were we down? Almost 100 handles on Wednesday last week
Oh, yeah.
after Powell. We sold off almost 100. Then we gained back like, 60, right? And now we're up, like, it's just, that is a sign of markets that are not working effectively. Traditionally, it's a sign of more manic and like really, really dependent markets on the financial system that is breaking down and having issues.
So,
And so that's why every little announcement, you get these type of moves. But
if, and by the way, for those of you that are out there live, please let us know if there's anything that we can address or answer questions for you. But if I were out there listening to this, I would say, well, Doc and Dave, that's really exciting. And it's really cool that you're, pointing out this history in the market and how things are changing. But how do we take advantage of that? What kind of ways can we take advantage of this market if we know that we're going to see more of these big swings, if we know that we're going to see, big moves both up and down? What's the best way to handle that?
well, the first thing that I think everybody needs to notice when you had that chart up is that where's the market going from left to right over the course of time? Up. And the market's going to continue to go up with an upward bias because what happens is we have lost 25% of the value of a dollar since 2020. Now, let that sink in. Your dollar from 2020 is worth 75 cents today in purchasing power. So what happens is things with value, assets and stuff, go up because the dollar's losing value. It's not that they're gaining value so much as the dollar's losing value, right? So why are we on this curve like this, straight kind of up and up? That's because the dollar's losing its value at a faster pace. And so the thing you have to just remember is over time, you're going up. Okay. Until the thing collapses, to be honest, until the thing finally just collapses on itself and you have to, fix the problems that nobody wants to fix that they keep kicking the can down the road. But that will go on so much longer. It may not even happen in my lifetime. So over time, you got an upward bias. So one of the easiest things to do to take advantage of this stuff, honestly, is just sell deep out of the money put spreads and let it run away from you. We do a lot of that. We sell futures, puts, and things like that. You're going to get one of those corrective moves into it. You can just roll that sucker out and let it go away from it, and you'll be profitable over time. The other thing is when you get those big pullback moves like that, and you see the turn, right? We just talked about, hey, look for that weekly moving average to get hit and then turn from there. Well, now we know we've hit that, so we can play and it back the other way. So you start to notice the ebb and flow, the patterns of these things. You notice when they start to break down. So for example, if the weekly breaks through the weekly chart moving average and then starts to head lower below that, that's a change in character, right? So that's something you can take advantage of. And so you have to recognize at least, the market character and movements, but over time, the bias is upward. In fact, who did I see? And this is not good for us, with our services and stuff we do. But I think it was, the guy Belfort, The Wolf of Wall Street's got a new book out, and he was doing an interview, and his whole shtick is just buy the S&P 500 and hold it for 10 years. And for a lot of people, that actually is the better thing to do, because if you aren't developing your skill set to be able to handle this type of manic market that swings more wildly, you're going to have issues. And if you don't know how to handle it, defend it, move around it, when to employ a strategy, when to take a strategy off, then you're going to get caught more and more often. So it's a skill set, and now you have to up your game in this type of market. But you and I, we'll pull a strategy off the shelf for 2 weeks and then put it back, and then do another one, right? So I think that's the key to this, is understanding which strategies work best for which markets and market types, short-term and long-term, and then developing your overall strategy to be able to work with that. What would you add?
Yeah. So, I agree with everything that you said. The one thing I would emphasize is that we spend an awful lot of time between Dave and myself, and the time that we spend in our trading rooms, is identifying what the character of the market is. So what does that mean? If we're doing something like this, if you're looking at a chart that's doing something like this, and it just seems like every day, it seems like the bears are just grinding their teeth, and they just, you see them on Twitter, just like, like the Michael Gayed guy, like every day it's like, oh, we're screwed. It's like, but the market keeps going higher. So we have strategies that we've played, and actually we're really excited about some of the work that we've done over the last 6 months or so, identifying these strategies and getting them tuned, where it's just real simple. We just play these, when we have quiet and trending behavior like this. So we've got a particular combination of trades that we use. So Dave's out there selling puts. We'll actually sell cash secured puts itself. It's like, go ahead, put me the stock if you want to, because then I'll turn around and I'll run this thing as long as I can and sell calls against it. So that's one thing that we do. We also play our diagonal campaign, and we can do zero DTE. We can trade zero DTE because generally you've got better performing or more behaved price action intraday. However, when things get noisy, this is where the turn comes. When things get noisy. And so there's a specific signature to this. And this one, we didn't get a whole lot of advance warning. It was like, next thing you know, it's like the world's coming to an end. So bottoms are an event, though. Bottoms are an event, and we always look for these bottoms to show up because they become excellent opportunities. But tops are a process, and this is where we transition into things like iron condors, range bound, because right there the implied volatility is going sky high, and we're able to sell positions that are a mile out of the money. So
And you go
we've
nowhere for 6 to 8 weeks, even.
Yeah, so you'll see this. It's a transition that we've identified. We've seen many times through our career. Here's a great one where things started to get a little bit noisy, got even noisier, got really noisy, and then it started to fall apart. And that was in early 2008 is where things really fell apart. And we had to be a completely different market approach versus what was happening through very quiet markets over here. So it was baptism by fire, I would say, back then. But some of those tough lessons to learn will pay dividends in future markets as we go through other corrections like this. So
Yeah, if you look
what
at today, like go to where we're at right now.
yeah, so what Dave and I are seeing is like, yeah, this could be the next corrective move, but if we break higher from here, and in fact, even if we, I can go over to just the daily chart, and
Yeah,
what we're looking at on the daily chart is you're looking at things like this, like the fib retracements. If we take the fib retracements from the top to the bottom, this is a clear signal for us. Getting through the 61.8 generally means you're going to fill in the triangle. And this has been a very abbreviated, very attenuated correction. So like Dave said, it was only 6%. It's done just enough to get the weekly and the daily charts fully charged again. So this is something else that we look at here is we say, what's happening with the energies? And so as we look at this, we see the weekly chart saying, I'm ready to go. Take me somewhere. Like it's bouncing around the place and it's got a ton of energy. Even the daily chart is saying, I've got plenty of energy to go somewhere, and I've got days worth to go. We're now above the 50-day moving average as well, too. So this may be, this rally that we're seeing right now, this may end up being just a weekly and a daily time frame rally. So this may get us up to 5,400, 5,500, something like that. And then we'll go through the same thing again.
Mm-hmm.
And the monthly chart is in exhaustion, but as you said, man, we've had years where this will stay in exhaustion.
Look at 2017. That thing just, rocked higher the whole year in exhaustion, So that chart, the monthly chart's not a great signal,
No.
for the short term. It's a better signal for the long term, especially when it starts to turn from exhaustion, right? You can see we got choppy and all that stuff and charged itself back up going sideways for the next year, which is like 2018.
Yeah, it took us almost 2 years to pay for that because of the way that it worked.
So but it's, the weekly to me is probably the best overall for inside of a year. Right. And so we just had a weekly swing. You can see it pretty much mimicked perfectly with where the market went. Right. We had sideways action for the span of 4 to 6 weeks with a pullback that charged it back up. And so typically in a bull market, we're probably off to the races again. So there's only a few things that can derail it. And to me, it would be if we just did see that some event, something, maybe CPI next week, maybe comes in a lot hotter than expected, just something to give the markets one last little bit of fear that allows them to kind of roll over, maybe come back down to those lows. That still cements the higher low, and then you head higher. I think by July we're higher than we are now. Let's put it that way, and probably at new highs. That's what I would expect at this point.
Yeah,
it's just when we get there.
Yeah, and then so we get through that summer rally, and then stuff starts to get.
And guys, you can mark my words. Whether it's starting now or whether it really starts and kicks off later this month, you get the rally through June and July into August. Towards the middle to end of August, things start to chop. Things start to get a little bit, wonky, as we like to say, kind of like what you guys saw on the chart, right? Remember, tops are a process. And then into September, you're going to get weakness of some sort, probably maybe some, even into October. with the election, and it's all going to be based on news. Hey, Trump looks like going to win. Biden looks like he's going to win. This is happening. Is the Fed going to cut rates in September because it didn't in July? And all of that's going to come into play. The uncertainty of a little bit of uncertainty, although this one, like I've said, I think is a little better election because the market knows what they get with Trump, and the market knows what they get with Biden at this point.
Yeah,
right? So there's some certainty to that.
Yeah, look at all this. Look at all that chop that we had back here in 2016. I mean, there was so much uncertainty. The market had no clue what to do. And then in the middle of that, of course, the Brits throw in Brexit just to make things spicy, just to get things juiced up again. But, we've been through something like this before. So, tops are a process. So we're playing volatility. Don't get married to your positions. Don't get married to your strategies. You may have to be very, very nimble. And I think that's going to be the name of the game going forward into this. We're going to see more volatility, certainly realized volatility in the price. We may not get as much implied volatility that we're used to. That's the one thing I've noticed is like we're getting less and less implied volatility. It used to be these days where you'd sell these big, fat, juicy positions, and we just don't get as much of that. And I think a lot of that has to do with zero DTE taking away, handling a lot of the volatility on a day-by-day basis, right?
Yeah, now they're talking about 24/7 trading.
Oh yeah, it's a long time coming because we've been 24/7 with Bitcoin for the better over 10 years now. So it's a long time coming, and I think the CME, the CBOE, and all those guys, NYSE, they're going to have to get with the times and say you've just lost your weekend. So
that's going to be if they do that, the options market. I don't know. It's going to be very hard. I'll stick to longer, wider condors at that point. Let the noise shake out in the middle.
Based on my experience with that, things will widen out when this happens. Things will widen out over the weekends. I don't think there's going to be that many people trading over the weekends. Because you're going to be discouraged to trade such a wide spread. So the only thing that's going to be a big advantage is if something happens over the weekend and you have to get out or you have to hedge or something like that, you'll be able to do so.
My only thought is a big player like Goldman Sachs and these others can really manipulate some things over a weekend if they wanted to, because they have the power to play those big wide plays. So it'll be a brave new world in trading if that goes through, but we'll see what happens. First, let's get some options on the Bitcoin ETFs, huh? Let's get that
oh my God, I can't wait for that. The problem with Goldman Sachs or one of those guys manipulating over the weekend is who are they going to manipulate? There's just not that many retail traders on the other side over the weekend to push things around. So because you'd expect the same thing to happen in the crypto market over the weekend, and we don't really have that much movement over the weekend. It generally stays pretty quiet.
The only thing I would say is and you can tell me if I'm wrong on this. I think this is something for people to understand. There are ways to trade options on crypto right now. People don't realize that. Like the true Bitcoin, you can trade options on it, and you've done that, but it's tricky, right? It's not like logging into your trade your trading platform and just trading. You have to go through some hoops to do that. Am I right?
You're absolutely right. There is.
You wouldn't have that obviously with.
Well, first of all, there is the /BTC contract, which is a Bitcoin futures contract. So the only way that you can trade Bitcoin options right now is through a futures contract. Unfortunately, there's other ways to do it on spot, but you have to be like for Deribit, you cannot be a U.S. resident. So let's just focus on what we can do here. But each one of these is sized for 5 BTC, 5 Bitcoin. That's a huge contract, right? So this is way bigger than what most people can margin. And so I think there is the I think it's this one here. Yeah, micro Bitcoin futures. So I've traded this before. Yeah, MBT. So this one, you could actually sell puts. You can do any, I've traded this one before. But, look at the, if we look at the volume and open interest on this, it's pretty sketchy. There's not a whole lot of people that are taking the other side of the trade. So a lot of this is you're trading against an automated market maker. They're going to do whatever they can to take advantage of you. So the spreads are pretty wide, and most people don't understand the contract because of how the settlement's done. And the weird thing about this is, like these options, I found out the hard way, they stopped trading based on European time and not U.S. time. So we all get this sense of, the world revolves around us in the United States, but it doesn't when it comes to these. So there's ways to do this, but I would say be really, really careful with that. But eventually we'll get the IBIT, options. I just, they can't come fast enough. Any other questions with anybody out there have any questions for us while we're still
pop in questions if you got them. But I think for the time being, this looks like a daily swing higher. We're already down to 50 on the energy. Typically these, like on the SPX, 35 or so is the end of the energy. After today, it'll drop further. So, we're probably going to be halfway through the move. That's why I'm thinking 5,200 becomes the probably the resistance for this, or right around that range. Maybe a little bit over it. And then we see if we get slapped back down next week. I think that's kind of how we see it. And then we'll see if any Fed speakers do anything stupid this week.
That's a good bet. That is a good bet. Okay. Well, I think we're at the end of our session for today. So thanks everybody for joining us, whether or not you came live or whether you're watching this on a replay. And so we do this every Monday here at about the same bat channel, same bat time on our YouTube channel. So please hit the notification bell. Make sure to subscribe so you're aware of when we do these things. But we haven't missed one of these in a long time, so we're going to keep it up.
Holiday or anything, we'll keep at it. We always let you guys know if you're on our email list. We send out and let you know even too if we're going to change it up and stuff. But if you get a chance, tell others. Let them know about our channel. I mean, we're climbing. You can see we've got we've now eclipsed 500 subscribers on this thing, just doing it for not even a year at this point. So, let others know about this if you like what we do and what we're doing, and tell them to check us out at 12 Minute Trading and take advantage of some of the freebies that we have on 12 Minute Trading for you too. Help yourself with your education, and we'll be here each week, kind of letting you know what we see in the markets and where we think things are going on a weekly basis.
Okay. All right. Well, thanks everybody. You guys take care. Have a great Monday, great week, and we'll see you next week. Bye now.